How you guys doing? CJ the Smart Guy with you, and I'm back with another episode. Today we have a really great guest. He is the head of strategy at Cointracker. Cointracker is essentially a tax software that keeps track of your cryptocurrency tax basis and make sure that you're paying as least amount as possible, which is an awesome thing legally. And yeah, he writes for Forbes. He's a fellow CPA. They call him the crypto CPA. Man, Shehan, man, I appreciate you for coming on.
Yeah, good to be here, CJ.
Awesome, awesome. So first, how long have you been into crypto? How'd you get into cryptocurrency?
Yeah, so I've been in public accounting for almost 10 years before I kind of shifted my focus on building software. Um, in the crypto space, I came to the crypto space around 2018 timeline. I was a practitioner. I had a small practice. Like 5 years ago, there were not many crypto CPAs. I mean, even today, there's only a good handful, maybe a dozen in the US. So yeah, I was a practitioner, kind of doing the tax returns and etc. And then I got the opportunity to kind of go to the software space and kind of build crypto tax software like Cointracker with the team that I have. Yeah.
Yeah, awesome. So okay, so what got you into accounting? Like, did you just grow up and say, "Hey, I want to just count numbers all day, crunch and punch"? Like, how did you get into accounting in the first place?
Yeah, I think I have. I mean, I like businesses, entrepreneurship and stuff like that. Yeah, I think I felt like accounting was like a safe career. Didn't expect to spend time in building software or anything like that. Just wanted to be a CPA, kind of go up the ranks from from joining as an intern to being a partner one day, which I was able to do. Yeah, other than that, again, it's just a safe career path. I mean, now it's even better actually because there's a huge accountant shortage in the US. So yeah, it's a good career, I guess. It's pretty recession proof too.
Yeah, yeah. I know when I got to college, I really didn't know what I was going to do. They just saw my SAT scores and they're like, "Hey, you're good in math. Do you like money?" I was like, "Yeah." They're like, "Accounting is for you." I was like, "Okay, let's let's do it." Um, Say, okay, so you got into accounting because it's gonna be a great profession. You got into cryptocurrency, and then like, what directed you to get into the software aspect of it? Because, um, most people that are in the crypto space are either doing taxes or they're doing bookkeeping or consulting. You took a different route, and so you were going to get into software. Are you also a programmer as well?
No, I don't have a programming background. So basically, I kind of quit my full-time job and kind of started my own practice with two other partners. We grew that practice. I just had this kind of urge to kind of for example, the problem with the service industry, it's not a problem, it's actually the reality is that you can only make a difference in, I don't know, maybe like hundreds of people at a time, like maybe 1,000 if you're lucky, if you have a bigger firm. So I was like, how can I make a difference in, I don't know, 5, 10, or hopefully 100 million users one day? So to do that, you need to be close to something with high leverage, like software, right? Because otherwise you're in the business of selling time. You only have 8, maybe 9 hours of your time to sell. So that's what kind of got me into software. Yeah, I mean, it was kind of like an accident. Again, I didn't, I wasn't in Silicon Valley or anything like that. I was in Midwest, Houston and New Jersey. But yeah, I'm glad that I was able to kind of transfer my technical skills into kind of building software with super talented people.
Yeah, I think that was a great business move because, I mean, it's funny, right? So I tell people that I got into cryptocurrency, being a CPA in the crypto space, because like in the gold rush, people were rushing to go get the gold.
Mm.
But I was like, but if I could build a business along the line of, people going to buy the gold, then I'm gonna always have a business. But then you took it a step further. You're like, hey, look, even if that's just the people in that one route. Let's, sell to everybody who has a business on here, as well as the individuals who are trying to get the gold. So that's an enormous business move. Big congrats on that. And so like with Cointracker, I know that you guys just came out with 2.0. What's the difference between 1.0, 2.0, and what separates Cointracker from the other competitors, the Bitcoin.taxes, the Coinleys. That's all that's the only ones I really know right now.
Yeah, maybe it's worth kind of me giving a quick overview of what Cointracker is. Again, kind of going back to my previous like answer, like several years ago, if you're doing taxes, you only had just one software in your stack, which is DIY tax software like TurboTax. Or if you're a CPA, you could have like more disclosures and stuff like that. But because of crypto, now you need special crypto tax software like Cointracker. So what these software do is they connect with your wallets and exchanges. They reconcile your gains and losses, track your basis, and they kind of give you the gains and losses you need to report with your main tax filing software. So Cointracker, we are the largest crypto tax aggregation software in the US. As you mentioned, there are other handful of crypto tax software. And again, they're good at certain things. And recently, like Cointracker launched like the 2.0 version of it. In the 2.0 version, we have significant improvements in our DeFi classification, meaning like, we can parse, smart contracts and DeFi protocols way better than the 1.0. You can have like optionality into certain transactions. Like, for example, you can treat wrapping as taxable or non-taxable. You can make staking as taxable or non-taxable depending on your positions that you take. We also have really good other tools for like tax pros and also consumers as well. We have this whole transaction page where you can kind of search for certain transactions using AI. Like you can give like commands like, hey, show me like all the staking transactions about this amount. So you can just type and it kind of filters everything without you having to pick and choose all the individual filters. And the last but not least, I think we are trying to make crypto taxes like more like a year-round thing. So you can do taxless harvesting every month, the precursor that you pick. And then finally, we have this monthly subscription instead of you having to pay at the end of the year. That monthly subscription allows you to kind of see your year-to-date taxes, year-to-date portfolio, your cost base, fair market value, and everything. So so we're trying to kind of be the co-pilot, or maybe like a crypto companion for you, so you can interact with crypto with peace of mind.
Yeah, that'd be awesome. Because I know me myself, I have a large client base that's in the crypto space, and you had mentioned DeFi and you had mentioned staking, and that's been an issue in terms of like cost basis. Because if you have, let's just say you have one Bitcoin, or let's just say Ethereum, because that's more regular. If you have one Ether and you stake it, and you're receiving ETH rewards, a lot of times on the software is that when you unstake it, it'll show it as a transaction when it's not a transaction. And then that, a lot of times you have to go through stuff manually. I know when I first started doing crypto taxes, I was doing everything manually. And I think it was good up until you start getting around the 100, 200 transactions per person. And when I started having people in the tens and 20, $30,000, $40,000, or like not dollars, but like different transactions, I'm not doing that by hand anymore. Like that is crazy. But people are doing 100 transactions a day in this crypto space on average, especially if they're bringing in good money. A lot of these younger kids who don't really think about the tax implications, they're just going crazy with it. And, it kind of worries me sometimes because I'm like, I hope you guys don't get audited. I hope, how do you feel about the IRS, coming after a lot of the citizens who are in the crypto space? I know there's been, additional tax enforcement in crypto. I know that the SEC has cracked down. I know the IRS, they've been sending out CP 2000 notices. How are you feeling like is the regulation viewpoint on crypto like going forward?
I think the number of people who have been reporting crypto in the US have been historically like poor. I think I don't have the numbers on the top of my head, but in 2021, you guys probably know that infamous question on the Form 1040. I think roughly 5 million people checked yes on that question. However, if you look at the number of users US exchanges have, they're in the, probably close to 100 million, or maybe like 50, 60 million. So there's a huge discrepancy between the people with crypto and the people who actually report crypto. So as a regulator, they had to do something to improve compliance. One tool that they have is sending these notices to people, and we saw 20,000 letters going out to users like in a couple of years ago. I haven't seen CP 2000s or any crypto specific letters lately, like 6173, 6174s. I'm pretty sure like, those gonna, come out in the next several years. The other tool that they have is subjecting, crypto exchanges to similar rules, like brokers, like, having asking them to issue 1099 DA. So those rules are coming out. Again, it's a big topic. I don't know if it's worth going into the details, but in the next several years, this space is going to be super interesting for honestly every stakeholder involved, including the IRS, because they're going to get humongous amount of like data coming from brokers. It's going to be super challenging for tax practitioners because they're going to get these incomplete and inaccurate 1099 DAs. Now we have to consider that when it comes to reconciliation. Taxpayers are going to get confused. Brokers have to go through these expensive projects to kind of get their systems up to date. Yeah, so it's going to be a messy few years coming ahead, I guess.
And I'm laughing because I can relate. Like, you mentioned the 1099 DAs. I've been getting 1099Ks, Bs, miscellaneouses.
Mhm.
It's just like, I don't know, like, who's giving you guys information. But whoever it is, it must be a bunch of different people because you're all sending different stuff. And it worries me when I see like 1099Bs where they'll have like the proceeds with no cost basis.
Mhm.
I know a lot of people get upset like with these exchanges for not keeping track of the cost basis, but like when it comes to privacy, what is your thoughts on like the privacy? Because should we be giving our social security numbers to DeFi, and like what's the privacy concerns that you have?
Yeah, so just to answer your first question, the missing cost basis thing, this is something that me and my team is actively kind of working with brokers, because that missing information, they are maintained by crypto tax aggregators like Cointrackers of the world and etc. So we're actually kind of working with brokers to figure out a way to ingest that information into the broker system, obviously with the user consent. And you can expect like a white paper coming out in the next several weeks. If we can do that, the 1099 DA is going to be hopefully more complete and more accurate. So that's happening in the background. Yeah, so the DeFi thing, it's going to be interesting because the way that the regulations are written today, decentralized protocols and exchanges, they will have to essentially operate like a centralized exchange. Basically, when you connect your wallet, they will have to collect your KYC and issue like a 1099 DA. Again, I don't know how that's gonna come out in the next several years, because obviously the regulations are still in its proposed stage. It is possible that they could carve out DeFi. It's a possibility. We don't know. But if proposed regulations become finalized as it is, yeah, whenever you connect your wallet to a protocol, they're required to ask you your KYC information. Otherwise, they would not allow you to transact.
Yeah, yeah, yeah. With convenience, comes giving up some type of privacy or some type of responsibility on your own. I know me myself, I get into Bitcoin because I look at it as freedom money, but with freedom comes more responsibility. And so I tell everybody in my space, I'm like, if all you do is buy Bitcoin and you hold it and you never sell it, technically you don't have to report anything whatsoever. How do you feel about that checkbox you mentioned on 2021? I know 2019 it started on Schedule 1 and 22 all the way through. It's on the first page. I've been telling people that I look at it somewhat as an audit trap, whether it's done intentionally like that or unintentionally. If you check that box, no, but you've been getting like basic attention rewards, like rewards or staking or anything like that, you've been selling and you check that box, no, I'm telling people it's like fraud. Do you feel as though it's that deep, or do you have a different viewpoint? What's your viewpoint on those check boxes?
Yeah, I think the checkboxes are there just to gather information about, people affiliations with crypto. I was in a panel this week with with a bunch of lawyers in California Bar Association. They have not seen any audits related to checking the box incorrectly or anything like that. So that's just one data point. Um, and personally, I mean, we have a large set of users, and we haven't seen any audits related to how you answered that question either. I think right now they're just in the phase of gathering data, not like super high fidelity data. It's just like a low fidelity, it's a yes and no. So at least if you check yes, okay, this person, they had to have something like some gain or loss in the future years because they have crypto. So I think they're trying to get like low fidelity signal about somebody's affiliation with crypto. I don't think they're using that question as an audit tool yet. That has been my experience.
Awesome. Yeah. Well, that's why I like to ask these questions because, a lot of times, I know I've heard many times that if you give 100 CPAs, uh, like a bunch of transactions, you might get a different, taxable like answer at the very end. And so, we're all expertise in it, but we all have a different viewpoint. So I think that it's really good to get different viewpoints because I know there's have been times where you've helped me out in the past where you didn't even realize it on Twitter. You'll type something out and I'm like, oh, I didn't even look at it like that. So I know you also do some editorials. You have like a column tax, but you also have Forbes. Could you describe a little bit about Forbes and how you got into that and how now you're a writer, like CPA, crypto expert, like you just do a lot of things. How did you get into like the Forbes and the column tax?
Yeah. I mean, my full focus is on Cointracker right now. I think this whole crypto tax software industry is in a very fascinating, point in the timeline of tax technology. Because again, as self-custody increases, the need for crypto tax software to will increase because that's where people can keep their source of truth. It's not going to be inside the broker. It's not going to be the 1099 So I'm super excited about what we're doing at Cointracker. But yeah, in addition to that, I have been writing on Forbes for like, I think like 2.5, 3 years now at this point, specifically about crypto tax related issues. I try to kind of, simplify complex things into, things that like average person can read and understand. Because taxes can be complicated and crypto adds another layer of complexity. So I plan to kind of it's like simplify these concepts so people can read and understand. So that's what I've been doing on Forbes. When it comes to column tax, it's a totally different company, another software company that I was able to be a part of in the beginning. It's basically embedded tax filing. Basically, we codified the 1040 in a way that any fintech app could introduce their own DIY tax filing software. So it's like a B2B type of software company, and it's doing pretty well as well.
Man, that's awesome. Now, before I let you go, you had mentioned earlier that there was a small percentage of CPAs and that the industry was going down. What would you say to somebody who is interested in becoming a CPA in the accounting field? What would you say to them? What advice would you tell them?
Yeah, I think I would say obviously like at a high level there are two routes you can take. You can take the private route or you can take the public route. The private route means like you're working for an accounting department in a big company. So I don't know much about that route because I don't have experience there. But if you go to the public route, I think you can get exposed to like so many areas. Again, depending on the type of accounting firm you work for. I encourage you to work for like a mid-size accounting firm because you could get exposed to like very, very big clients, middle clients, and also like, very small clients too, instead of working for one of those big fours. Because in big four, like, you only get like, like super like, huge clients and you only get to focus on maybe like, I don't know, maybe one schedule of the entire tax return. So it's really hard to convert that very specialized skill into maybe one day starting your own practice, because you just don't know the other 99% of the tax bill. So I encourage you to kind of start your career in like a mid-size accounting firm in the public sector, in the public accounting field. And yeah, you can start growing there from, I mean, you can be a partner, or you can kind of start your own firm like you did, CJ. So yeah.
Yeah, thank you. Yeah. I was terrified of going Big Four. They was telling me how many hours we were going to work, and I was like, no. And so I took a job at the railroad, and didn't realize that they were going to work me just as much. And I was like, oh no. And so after 3 years, I was like, I can't do this anymore. And that's when I started studying for my CPA. That's when I started growing out my hair. See, I was like clean cut, clean shaven when I was in corporate America. The second I quit in 2016, I was like, I'm done. And I got into crypto in 2017. And that journey to getting my license. See, I think we got into crypto around the same time, but the difference was you were already a CPA, and I was at the beginning stages of studying for my CPA.
That's it.
So we were learning crypto at the same time. And I keep telling people, like, once I passed the CPA exam, the crypto taxes didn't take me long to understand, because I understood the crypto language. That language, like, the reason I pump you up is because I'm understanding the amount it takes to understand the CPA language, the crypto language, and then to understand like software and then editorials. Like, just alone, that's like 4 complete different languages, man. That's no small feat. So I want to give you your kudos, give you your flowers on that. Thank you for talking to the people who are interested in the accounting firm. And then how can people reach you? And if you had one more thing you'd just like to tell my audience, what would that be?
How can they reach me? I'm pretty active on Twitter at the Crypto CPA. I'm on LinkedIn as well. You can search for my name. One thing I would say, I keep tweeting this all the time. I think crypto, like a lot of people think that crypto is invisible from the eyes of the regulators. But that's not true. Even though we think it's anonymous, so pseudo-anonymous, it's very visible to the regulators because your records are permanently on the internet somewhere. So I wouldn't use crypto to, understate your taxes or evade taxes. If you do any transactions, if you make any gains, make sure you pay your fair share of taxes. And also you can work with qualified tax pros to kind of plan your taxes, meaning you can legally reduce your tax bill as well if you proactively take actions throughout the year without waiting until April 15th.
Yeah, for sure. And Cointracker, where can they download that?
Yeah, Cointracker is a web app. There's no downloads. You can just go to www.cointracker.com, sign up for an account, connect your wallets and exchanges, and see your gains and losses. If your situation is a little bit more complex, you can still use Cointracker and invite your tax pro like CJ into your account, so your tax pro can help you reconcile some of the transactions.
Awesome. Thank you, Shehan. Y'all have a good one. Appreciate you coming on the Crypto
Cool.
CPA, and talk to y'all soon.
Thank you. Bye.